Hi, everyone. Thanks for joining us for today for this AMA session. I'm Nick, currently serving as Chief Commercial Officer for Arkefi, and I'm thrilled to host this AMA session together with Kima Network. Our main theme for today will be about exploring Kima's innovations and and of course, the Arkefi partnership. Eitan and myself know each other for quite some time already, so I think it will be a vibrant space today. Before we dive into it, I'll do a quick introduction. So I've been involved in the blockchain space since 2019, initially joining Nexera, formerly known as Alliance Block, as head of sales. And this is how I got introduced to Arkefi. Arkefi is actually one of the first projects that is utilizing our cutting-edge technology for real-world asset tokenization and providing this smooth and interoperability. So before we kick it off, I would like to give Eitan the chance to elaborately introduce himself, how he got introduced to the space, and of course a quick introduction about Kima, and then we kick it off.
Yes,
floor is yours.
Thank you. So, real quick, I've been in this space since 2013. Got exposed to this document that piqued my interest. I read it with interest, and it was a mind-blowing experience. That document was the Nakamoto white paper. For the first time, I saw a combination of innovations. It was unique because it had both financial, technological, and social innovation. And I immediately got intrigued by the huge potential of things that can grow out of these concepts of sovereignty and ownership of assets and moving value between counterparties without intermediaries. So I started experimenting with crypto. Back then it was mostly Bitcoin. And what could you do with Bitcoin? You could buy, sell, and hold it. So very early on, I saw some of the security problems of holding Bitcoins with wallets. That was before the days of cold wallets. So with friends, we created an open source project that in essence created the first MPC-based Bitcoin wallet. And following that, I was involved in a bunch of other projects, had my own startups back in 2017-18, dealing with trading and arbitrage in crypto. And I've been working on Kima for the past 3 years, over 3 years now, with the premise of changing this space and actually interconnecting the crypto Web3 space with the traditional finance and Web2 space.
Yeah, thanks for the introduction, Eitan. I think it's very nice to see that the vision that we, I think, already spoke 2 years ago about is coming to fruition. And before we get started, maybe you want to give us a quick glimpse, because Kima is well known for its cross-chain interoperability solution. This is what you showcase in the market right now, and the need for and the necessity of not using smart contracts. Could you maybe walk us through how this technology actually works and why it is a game changer in the blockchain space, according to you guys?
Yeah, sure. So when we look at the blockchain space, so obviously we see the fragmentation in the space. Blockchains by design cannot communicate with each other. Every blockchain is an ecosystem on its own. And because that's how the security works, that's how the blockchain manages to verify, validate transactions and build the blocks. Now, we cannot assume that there will be only one blockchain in the space. So that fragmentation is something that instead of trying to change it, we just have to live with it. So Kima's original vision was we envision a world where blockchains manage to coexist, but applications, the application layer, not the infrastructure layer, they can benefit from the best of all worlds and are definitely not limited by selecting a specific blockchain. So Kima's mission is to interconnect these infrastructures. And by the way, we like to call them ecosystems because it's not only chains, it's we also work with bank accounts and traditional financial systems, and we interconnect all these ecosystems together. So applications and what's even more important, the end users, they just get exposed to the functionality, to the innovation, and not the technical challenges. So one of the challenges of the interoperability space and bridges per se are one of the challenges is security. And just as I saw 11 years ago some security challenges in the wallet space, we think in Kima that also interoperability should be done, should be enabled, should be available without suffering from the potential security risks. And when we look at what are those security risks, what are those bridge hacks that we see almost on a weekly basis, so we can see that those are mostly either exploits in the code of smart contracts that are being used by those bridges, or the compromises of the private keys for the smart contracts that hold the funds. So what Kima did very early on in our journey, we tried to envision a world where instead of mitigating the risk by auditing smart contracts, what if we could eliminate them altogether? So if there's no attack vector, then it cannot be exploited. And that's what we did. So we also filed a patent for it. So Kima is an interoperability protocol that removed the use of smart contracts. We enable transfer of value between ecosystems without relying on smart contracts, without relying on the private keys for those smart contracts. And that's one of the unique selling points that Kima has in the space.
Yeah, I really like it. It's really in line what we discussed back then during the Paris Blockchain Week, where you guys were during the exhibition as well. I think one of the prime examples we discussed back then is actually bridging DeFi and traditional finance, right? Because everybody's talking about it, but with those high amount of attack factors being in the space, I think you guys are really onto something, right? So we've also heard that Kima is bridging DeFi with traditional finance. So could you maybe share some practical examples on how the Kima protocol has been integrated with banks or payment networks to give the audience a good example on how that potentially could work?
Yeah, sure. So a couple of examples. One example is related to the credit card space. So we did a couple of projects with card issuers, card providers. We're also, in that sense, we're collaborating with FinSec Labs, which is a MasterCard-owned innovation lab. So this is something that is becoming more and more common in various areas in the world, where people, they adopt stable coins, they adopt crypto assets. They hold them in their own wallets, but then the problem is, what can you do with those stable coins other than in the crypto space? What if you want to buy something with a card in a brick and mortar shop or online, and use those stablecoins. So instead of going through those intermediaries that will nickel and dime you, you will pay high percentage just to off-ramp these stablecoins into fiat, and then use that fiat or top up a prepaid card with it. So we enable those card issuers to do this seamless card top up. So you can top up a MasterCard card issued in your local country, but instead of doing it with cash or a connection to a bank account, you would just do it directly from your MetaMask wallet or any other wallet. So the flow of stablecoin into the traditional Visa and MasterCard system is becoming seamless. And that link is done by the Kima capability to move value between those ecosystems. So that's one example for a use case that is familiar by everyone. Another use case is related to things that we're doing with regulated financial institutions, including one central bank, where we enable a DVP transaction. DVP stands for delivery versus payment. Basically, it's an exchange between two parties. But instead of relying on an intermediary, they can directly exchange the asset and the payment in one atomic swap. So an application that enables it can enable direct peer-to-peer swap between the two parties. And in the specific cases that we're involved with, we're talking about tokenized stocks. That's just one example, but it can be applied to any real-world asset or tokenized asset that is being sold by someone, and the payment then is delivered without an escrow or a third party in the middle.
Yeah, spot on, Eitan. I think this is one of the mass adoption questions that still needs to be solved. I think if we can solve that, there's a huge potential and upside there. We at Arkefi also see that as one of the major challenges to actually scale the platform and make it easy and accessible for everyone to participate in the platform. Like you said, right, USDC or stables are now in somebody's wallet, but not actually working or creating additional capital. And I think this is also one of the opportunities why we launched the Arkefi platform, to generate stable yields and finding interesting investment opportunities. And I think that's also linked to the partnership that we're having. So I'm actually interested to know a little bit more, right? So we've discussed about integrating the Kima protocol into Arkefi's platform. And I was actually wondering, from your perspective, how will this partnership enhance or potentially enhance the liquidity and transaction efficiency for the tokenized assets that we list on the Arkefi platform?
Yeah, so in a couple of ways. One is the most straightforward, and that is the additional liquidity. So one of the features that Kima has, we call it a universal payment rail. So that means that instead of limiting the payment trail to one specific asset, a specific stablecoin or a specific crypto asset on a specific chain, all of the diversity of payment rails and methods is becoming abstracted into one API. So Arkefi users in the front end, and I'll touch on that in a second, can basically use for payment purposes any type of asset, any type of stablecoin, and even fiat potentially to purchase these assets for the real world assets that are offered. So the immediate impact is a huge change in the potential liquidity. So these assets are now more liquid. If I'm selling a house in a small country, in a small island country, then I'm limited to the liquidity of that island. But if now anyone can purchase the house with any type of currency in a seamless manner without opening a bank account, without moving money into that bank account in that small country, then now the asset is way more liquid, and liquid assets worth more. So it has also impact on the prices of these assets, because now more people can buy them. So demand is higher, and therefore price goes higher. So that's one aspect. The other aspect is user experience, which again, the better the user experience, more users can use it, and the assets become more liquid. So improved user experience with all those payments and transfers between chains and assets, if all of that gets concealed and becomes seamless, then more people can use it, and the assets become more liquid and more valuable.
Yeah, absolutely. Yeah, it's not only about the liquidity of the assets, but as well kind of scaling out these solutions, right? So if we look at from an Arkefi perspective, where the sell side demand is huge, right? So we currently have a financing pipeline of over 500 million in assets, but the liquidity is actually the main issue, right? I think if you need to create a triangle between liquidity, use case, and actually the participants, this is usually where a couple of those use cases don't see the light and become successful. So in a matter of scaling the solution, how do you foresee Kima protocol as well supporting large amounts of maybe stables, other type of assets moving across different chains?
Yeah, so we keep expanding the supported assets. So stablecoins, obviously, this is the lifeblood of this industry. The abstraction that we provide abstracts the types of stablecoins. Circle, Tether, and we will keep expanding it to additional stablecoins like the PyUSD and DAI and some others. But then again, it's not only about stablecoins. So for us, USDC and the US dollar, once we add the support for $1, then it's the same API for the developers. So potentially Arkefi users would potentially be able to use their dollars, credit cards, and bank accounts as payment methods. So this expansion of types of assets is one dimension. The other dimension is the expansion of the ecosystems. So today we support 10 chains, but for us, both adding more assets and chains, since we don't have a smart contract, is a relatively simple and easy, fast task. So we plan to be very, very scalable in terms of the supported chains and assets.
Yeah, really nice, really nice. So if I check your guys' Twitter, it says the most anticipated TGE for 2024. I think that's a very nice hype statement. And could you maybe explain the audience as well, kind of the role of the Kima token and its main utilities within the ecosystem?
Yeah, so Kima is a proof of stake network or a delegated proof of stake network. So that means that the token functions as a way to secure the network. So there's no Kima network without the token, because it's needed to be staked by the validators. It's in that sense, it's the most basic utility of every proof of stake network. On top of that, we have the participation of the community to the security of the network by delegating the token to those validators. The third utility is the gas. So every transaction has a certain price tag. If it's the most basic transaction of transfer, so it's a very nominal fee, but it's more than zero because that's the way to avoid spam and empty transactions. But applications that use the Kima token, so when they invoke Kima transactions, so they have to pay with gas to create some value underneath it to make sure that we don't the network doesn't get spammed. So this is the main utility. We have some additional ideas for the future, but right now it's more about securing the network. That's the number one feature. That's the number one utility of the token.
Yes, thanks. And talking about the future, can you maybe showcase some of the future developments that you have in mind for the coming 12 to actually 18 months, and what major developments can we expect from Kima?
Yes, so yeah, we're very excited by the future. Actually, we're launching the token soon. We're launching the mainnet, but the best is yet to come. I mentioned the ability to connect to additional ecosystems, so supporting more chains, supporting more currencies, more fiat currencies. The first one would be euro, but and dollars, and but we have to also expand and scale in one jurisdiction at a time for compliance and regulation reasons. So expanding globally, geographically is definitely something that is something that we will focus on in the coming 12 months. Additional features, a major solution that we're planning is to support multi-chain tokens. So Kima will be the only provider of solution to offer tokens on multiple chains without smart contracts. So token will be issuable on multiple chains, and it will be held in the Kima managed pools. So the only way to get access to those tokens is by depositing a token on another chain. So Kima will be this lock-unlock orchestrator that is protected with the Kima security layers. So a multi-chain token solution, that's something that is coming. We are talking about this DVP transaction, and we have we're going to make it more and more efficient and compelling for various use cases, including CBDC. Yeah, I think that these are the most exciting things that we're planning. We have some additional things, but I cannot discuss them yet, so they will remain surprises for 2025.
No worries, no worries. Don't give it away all at once. We talked about the technology as well, right? If I'm not mistaken, you guys are currently in patent discussions as well. How is that going on your end?
Yes, so we indeed. So we have one that was filed. So the cross chain transfer value without smart contracts was filed as a patent. We are in the process of filing 2 more, and we have a few more planned for next year. But the main one, the core one for transfers without smart contracts is done, and it was filed. It's pending still, but yeah, it's out there.
Nice. Yeah, it's always a rat race, right, to stay ahead of the competition. And I think, as far as my knowledge goes, I think there are not really any similar player in the market that has a similar solution like you guys. So maybe a little bit in-depth question on that topic, right? So how do you guys envision your long-term strategies for innovation and remaining competitive, right? Because the market is going so fast. So I think it also takes a lot of effort to keep up front.
Right. Yeah. So I think that the fact that the architecture is agnostic to the tech stack of the endpoints that we interconnect, that gives us a big advantage and a first mover advantage because since we don't have smart contracts, we can connect also ecosystems that don't have smart contracts like Bitcoin or Web2 APIs. So that is an important advantage, and it is just the tip of the iceberg for a lot of innovation that we're planning to provide in this space. And that means also connecting Web2 backend systems, not just financial systems, but also enterprise backend systems that will be connected to the Web3 space. So think of a smart contract based application, a Web3 application that can invoke an ERP backend process in an enterprise in a seamless manner. So that is the type of innovation that we're looking at. If I have to generalize it, so it's about the security features that we're planning to add, and it's about the interconnectivity of Web2, and not only cross-chain, but also Web2 systems. So we're starting with the financial system, but the plan is to expand to other types of enterprise backend systems.
Yeah, you touched upon briefly on Bitcoin last week, or actually this month. I was at Bitcoin Amsterdam. Quite surprised about the vibrant ecosystem and all the different applications that we see being developed on Bitcoin. Do you guys also have a prominent role in this ecosystem, or planning to play a prominent role in this ecosystem?
Yeah, so the vision is to connect so Bitcoin. The Bitcoin system is pretty much in a way it's isolated, and we would like to make the interconnectivity to Bitcoin-based protocols, projects, applications. Why not make them connected with DeFi on Ethereum? Why not connect them to backend system of corporates? Why not connect them directly to fiat? So that's the role that we see ourselves playing. So we welcome the innovation in the Bitcoin realm, but we think that yes, there's a lot of TVL in the Bitcoin side, but it's mostly in Bitcoin investments, which are idle. That doesn't mean that these projects will benefit necessarily from all the liquidity of Bitcoin, but I think that they can benefit from liquidity on other ecosystems like Solana and Ethereum. So we're trying to combine the best of both worlds, the Bitcoin with its potential liquidity, with its security, and the usage and applications and ecosystems, the vibrant ecosystems in other places, and try to build this bridge. Again, since we don't use smart contracts, for us, connecting Bitcoin is not an issue.
Yeah, I think that's also a nice bridge to your introduction, right? In the end, Bitcoin is what most of us draws into this ecosystem. So it's really nice to see that the applicability with also on top of Bitcoin or collaboratively with Bitcoin is increasing massively. Thanks, Eitan, so much for the insightful answers today. Before close it off, do you want to have any final says?
Just First of all, thank you for this stage and giving me the opportunity to present what we're doing. My final words would be to invite everyone here to be part of our community. It's vibrant and growing. We listen to what the community has to say. We invite the community members to take part of the journey once the token is out, so they can also contribute to the security of the network. So just follow us on social media. We have every thinkable social media out there, and just join us and be part of the journey.
Yes, again, thank you, Eitan, so much for your time today, and also for our audience. We appreciate your participation and enthusiasm. We're also happy to take any questions if you want, paste them under here in the chat or somewhere to follow up on the next AMAs. And I'm looking forward to the next opportunity. Thanks for your time, Eitan. Much appreciated.
Thank you very much. Have a nice day, everyone.